Hi everyone, we'll be kicking off the webinar in around 4 or 5 minutes. Thank you. Meanwhile, can just somebody confirm if they can see the presentation only in front of the screen? Just type inside the chat there. Okay, Vladimir, thank you very much for that. Okay, once again, thank you everyone for being here. This webinar was supposed to be given by Kay, but due to unexpected circumstances, he couldn't make it, so I will be replacing him today. Hope you don't mind. All right, one more time, I want to confirm 100% if you see the slideshow and nothing else on the screen. Just type either in the question section or the chat section. Okay, awesome. Thanks for the confirmation. Right, so let's kick this off. The agenda today By the way, I will keep this relatively short and straight to the point, and in the end we will have a question and answers time as well, so I'll be answering as many questions as I can. First of all, I'll introduce myself just a little bit and the group where I'm from. Then we'll be going through price action, meaning trending, and mean reversion, meaning ranging market types and how scalping method can be used in those market types. Then how to scalp efficiently. We have 4 steps for these. And what are the dangers that come with scalping itself. Before we go any further, I will need to read the disclaimer and the risk warning for you. Contents of this material are provided by a third party, not hot forex, and are for informational purposes only and do not constitute investment advice. Hot forex and blue sky binary assume no responsibility for any potential errors, inaccuracies, or omissions in this material. Nothing in this communication contains or should be considered as containing an investment advice or an investment recommendation or a solicitation for the purpose of purchase or sale of any financial instrument. Any views or opinions presented within this material are solely those of the author and do not necessarily represent those of Hot Forex, unless otherwise specifically stated. Risk warning. Currency trading may not be suitable for all investors as it carries a high degree of risk to your capital. Trading such products is risky and you may lose all your investment. Past performance is not indicative of future results. Poor fill rates, expiry times, market volatility, and platform errors could result in losing trades. Before deciding to invest in currencies, you should carefully consider your investment objectives, level of experience, and risk appetite. You should be aware of all the risks associated with foreign exchange and currency trading and seek advice from an independent financial advisor if necessary. Now, as that is out of the way, I would like to introduce myself. My name is Otto. I'm one of the senior traders in Blue Sky Forex, which is part of Blue Sky Binary. And we are a group of 5. We provide education and 24-hour trade support and analysis to our followers while we trade ourselves and research the markets. And Blue Sky Forex is presenting this webinar in behalf of Hot Forex. Now, we all have different approaches to trading. I myself, I'm completely technical. I do enjoy trading with indicators and analyzing candlestick patterns to make my trading decisions, while other members of our group might be more reliant on fundamental analysis, including news and such, to make their trade decisions. Now, no matter the style you have towards trading, you will still encounter 2 types of market types. One of them is price action, which is then trending, and the other one is mean reversion, which is a ranging market. You most likely have heard the saying, a trend is your friend, and if you become familiar with a price action or a trending market, you will realize how a strong trend can earn you quite a lot of pips. And if you're trading a long-term fundamental style, then you can reap quite decent profits with a good price action trendy movement. Although scalping is not trading a long term, scalping is trading multiple short-term trades intraday, just aiming for around maybe 15, 20, 25 pip gains, and having tight stop losses as well that accompanies that. Now, you will need to be able to identify the market type if you are to trade successfully, because if you're not really familiar what market conditions you're trading with, you will most likely end up with a lot of losing trades because you simply don't know how the market behaves. Now, this is the reason why you need to know during what sessions you're trading in, because the market conditions and the market type can quite quickly change during the day, depending on what country is trading at the time, either Europe, US, or the Asian market. So you need to be fully aware when you are trading. So let's start off with range in market and how to utilize scalping within that. First of all, along with trading on the ranging market, you'll need to understand and how to use support and resistance levels, because you can utilize these to define your entry and exit points of your trades. Inside the ranging market, the price usually lingers between a certain support and resistance levels. The closest resistance and support levels are usually called R1 and S1. The next support and resistance levels, which are further away from the current price, are called S2 and R2, and the same goes for R3 and S3, which are the furthest away from the current price and also the hardest one to break or breach. The very first support and resistance levels, if you are in a truly ranging market, quite often the price, when it does reach the first resistance level above, it will bounce off that level and continue down towards the first support level. So you can use this to your advantage and essentially start up a short trade, and you can set your take profit to the very first support level and set your stop loss to the next resistance level above at R2. So this is a very plain and very simple example how to reap these kind of quick and small gains inside the ranging market. There are different types of support and resistances. They are basically categorized into basic types. The one that I was talking about, SR1, SR2, SR3, these are horizontal resistance levels, which usually are on the very logical levels and round numbers, for example 1.1500, 1.2000, and so on. These are the logical and psychological key support and resistance levels, and price quite often will revert from those levels, and then of course may retest those a bit later on. There are also diagonal support resistance levels, and these include trend lines, in example. And there are also dynamic resistance and support lines like Bollinger Bands and moving averages. Within a ranging market, you're most likely to use the horizontal key levels. And for example, Fibonacci levels are one of the most commonly used horizontal key support resistance levels that you can draw on your chart. In order to trade forex in overall, obviously you need to have a MetaTrader 4, a platform which is most commonly used within brokers. And these support and resistance levels can be drawn yourself manually using the tools MetaTrader 4 will provide you, or you can also browse the internet to find free downloadable support resistance indicators and expert advisors that do help you define the key support resistance levels for you automatically without you paying attention to or researching those levels yourself. The next thing what I'd like to explain is how to trade or how to scalp the trending market. As you can see on the left side, as the price pierced the very first support level, this price action was driven by news, and then the price continued to trend for quite a long time. Now, when the price moves, it never moves in one line or in a straight line. It always moves in waves. Now, these waves are called impulse waves and corrective waves. Impulse waves are the waves that move the price along the trend, and the corrective waves are the waves that pull the price back, aka makes the price retrace. Now, how to time your entries and exits with the trend itself. It's really important to not to trade against it, because as you can see on the left side, it's relatively difficult to determine the very peak or the swing high when the price can actually revert and start to retrace. So it's highly recommended not to aim for these peaks, at least in the beginning, but rather use the retracement, the swing low, to time your entry. So as you can see at the very trending line, the price almost reached it, and it started to continue along with the trend. So that is the point where your entry should be. For the stop loss, you can again mark down the very first support or key support level below, just in the example on the left side where the price goes up. And when it does retrace, it does not usually retrace the full movement of the breakout or the trendy move. What it does, it usually goes halfway. You can generally say that usually halfway, and your take profit can be this swing high. So if you can't see my mouse cursor, then at the same level as the very first peak after the trend established, you can set the take profit there. Or if you want to aim just a little bit higher for a bit of a higher pip gainage, then you can set your take profit at the next horizontal resistance level that you see above the swing high. It's really important to keep in mind that you need to keep your stop losses quite tight, because you're still scalping and you're not aiming for one major trade during the day or during the couple of days or a week. You are actually initiating 5 to 7 trades per day, and this is the reason you're aiming for a tight stop loss and small pippage gains, just to accumulate those small wins, which eventually will lead to a decent gain by the very end. As you can see, there are a couple of impulse waves going up and a couple of retracement or corrective waves coming down, until the price starts to range again, just as in the example in the chart, and then starts to move down. So all that I explained also applies to a southern movements, to a bearish market. So all this the same logic and the same principles apply. And while targeting your entries, MetaTrader 4, and I'm sure also some other programs you can use for trading, gives you the option to set pending orders. As soon as you have defined or identified a ranging or even a trending market, but Then you can set a pending order for the entry that you desire. So you don't really have to eyeball the price movement at all times, but you can already predefine the entry and also the stop loss and the take profit you were aiming for. So this gives you a lot of freedom whether you want to preset your trading or the specific trade. You can also set how long MetaTrader 4 is monitoring the price with your set levels, or you can simply do it manually if you prefer. So this is completely up to you how you want to approach your scalping intraday. And just to summarize about the ranging market, it's easier to identify than a trending market. Use the key support resistance levels for take profit and then your stop loss. Make sure you keep your stop loss tight because you are scalping after all. Now, about the trending market, to summarize, you can use trend lines, you can use moving averages to define your entry points. For example, moving average crossovers that we will get to in a small bit. Okay, and the charts that you should use to identify the market conditions should be 1 hour or 4 hour charts. So these are the chart timeframes that I personally and our team uses for determining the market conditions, analyzing what has happened during the day and within the past week, and then we will decide what approach to take towards our trading itself. You can use lower time frame charts like 30-minute charts. You can use 5-minute charts to really aim for that precise or accurate entry. This is already up to you. I do sometimes peek on 30-minute charts as well if I'm unsure whether the price potentially could move, lower or higher a couple of pips, whether I can get a better price from a trade or not. So it's totally okay to use a bit lower time frame charts as well, just to get that very precise entry point. Okay, now there are a couple of very important things to keep in mind when you are scalping. The very first thing is the spread. In general, spread it can as you're trading high frequency, then spread is something you have to consider because it eats away just a bit of your gain at all times. So the spread is the amount between the current price between buying and selling a currency from your perspective, essentially a difference between the bid and ask price. And it does depend on the broker's competitive pricing, liquidity, and the volatility dynamics of any currency pair you come across and trade. So it is highly recommended to go for the very lowest spread pairs like Euro USD, USD JPY, basically all the majors where the spread is the lowest. And of course, when you're trying to trade exotic pairs where spread is high, then you can already see how your gains are eaten away by the spread itself. And the other part you should take a look at is liquidity. Now, why it's important is that highly liquid pairs like Euro USD and USD JPY, they do tend to, so to say, obey the laws of ranging and trending better than lower liquidity pairs, where these lower liquidity pairs become more exotic and can have these really unexpected sudden moves, sudden large moves that can trigger your stop losses quickly, because your stop losses are relatively tight when you are scalping. So it's best to avoid exotic pairs. It's better to stick to the majors, because you will always have majors available. Generally, these always provide low spread. You might find sort of these kind of no spread or ECN accounts that offer very low spread, but these offer introduce commission. So if you're trading high frequency, then you are paying commission for each trade. So you might want to look into starting up an ECN account instead, because the spreads are really low. Okay, and now I already mentioned this before, but about the chart calibration and what time frames to use. As we are aiming for maybe 1 to 5, or some aim for more trades per day, 5 to 7, then defining the market conditions on 1 or 4 hour charts is good. Timing your entries on 30-minute charts, maybe 5-minute charts is also great. And you should be using multiple time frames, because multiple time frames ultimately give you a better overview of the market. You can then define whether to start trading or scalping, or whether to stay out of the market at the moment. It's a bit nonsensical to use more than 4-hour charts or daily charts to analyze and start up your trades, because these give a too big of a picture of a longer term market behavior. These charts you can use for longer term trading if you're really into fundamental trading based on news and the economy of countries. Then these are the charts you're going for, but not for scalping, not for intraday trading. And on the other side, it's really silly to use 1-minute charts to determine the right setup for your trades, for your scalping, because it so to say gives you a tunnel vision. You can always see so small that you fail to realize the larger picture and how the market can move on a larger scale. So yeah, the ideal time frames are 30-minute to 4-hour charts, and make sure to use multi-time frame. If you doubt, then definitely use other time frames as well to determine whether you want to enter the trade or not. Now, step 4, I already mentioned about crossovers. Now, I personally like indicators a lot. I rely on them, along with key support resistance levels, Fibonacci, and candlestick pattern analysis. I don't personally trade crossovers. However, crossovers, they are a good way to determine whether the price is starting to go into your direction or not. Essentially, the idea is you will have a long period or a large period moving average, and the shorter period moving average. For example, an exponential moving average, which is the smaller period. When the smaller period moving average moves across the longer period moving average, then the price has moved to your direction, and this triggers a relatively decent entry point. The reason why I don't use moving averages is that it is slightly a delayed indicator. So first the price moves, and then you will have afterwards you have an indication by the moving average crossover that you can enter the trade. So in some occasions it might be a bit too late to enter the trade already. So I personally don't go with crossovers. To rectify the delay, instead of lower period simple moving average, you can use a lower period exponential moving average that is more sensitive to the current price movement. However, the side effect of this is you will have more false signals. So let's say the price moves up a bit, the exponential moving average touches the longer period moving average just a little bit, but then the price fails to continue its direction, and you'll be put out of money. You'll hit the stop loss. So this is something to keep in mind when you are trading moving average crossovers. The crossovers are always is a delayed indicator, so be very careful when doing that. Although if you're trading a longer period trades, you're aiming for a larger pippage gain, then these moving average crossovers can be something you can better utilize than for scalping. A good thing to use for scalping are overbought and oversold oscillators like an RSI, which is a relative strength index, and stochastics. These measurements show you when the price is potentially overbought or oversold by giving you a certain overbought or oversold figure. The higher the oscillators go, the more overbought the currency is, and the lower the indicators show, the more oversold the currency is. So I would accompany key resistance and key support levels along with the overbought and oversold oscillators or indicators to determine your entry points, especially on a ranging market. For example, if the price has moved past the very first resistance level from bottom towards upwards and reaches the second resistance level, and you also see an RSI showing a value of 80 or more, then it indicates a good short position trade. In example, this is the way you can use the indicators of overbought and oversold along with their key support resistance levels to determine when and where to enter the trade. Now, something to consider as well are Bollinger Bands. This is actually a fantastic indicator that you can use during a ranging and also a trending market. And Bollinger Bands create a certain channel for the price around the moving average. So when the price moves to further up from the moving average, and then it might bounce back from the very top Bollinger Band and revert back to the very mean, meaning the moving average in the center. And same applies when it moves to the very bottom of the Bollinger Band. This indicator is very commonly used to determine the market condition as well, because if the Bollinger Bands both the upper and the bottom band are flat, then you're generally dealing with a ranging market. And when both Bollinger Bands, the lower and the higher one, are moving towards a certain direction, then you're dealing with a trending market towards that same direction. And this is a good way to also get a good overview of the market. And then the Bollinger Bands can also be used for timing your entries. The period for the Bollinger Bands can be, 20 periods, and the deviation can be 2, or you can set the period to 25 and the deviation to, in some cases, 2.5. So these are good measurements to use with the Bollinger Band. It takes a bit of time to practice. The Bollinger Bands, they do give you certain patterns from time to time that you can use for scalping and also longer duration trading. Now it's important as well to determine the risk-reward ratio before you enter the trade. When you are scalping, then we generally use the risk-reward ratio of 2 to 1, meaning our take profit is 2 times as big as the stop loss. Or in some cases, when the conditions are a bit more riskier, then we'll use 1.5 to 1 risk-reward ratio. So this is something to definitely keep in mind, just to know what you're aiming for. You need to know your risk-reward ratio. It's a bit of an overkill if you're aiming for 3 to 1 or 4 to 1, because with scalping you really want to catch these fast moves and as quickly as possible. So aiming for that high risk-reward ratio can be dangerous and counterproductive, because the price never reaches your take profit and hits your stop loss instead, because the price already reverses by the time it hits your take profit. And it's definitely not recommended to risk any more than 1% of your total account equity per trade. And if at any given day you encounter more than 5% risk of your account equity, then you should really revise your trading style, whether stop scalping or just revise your past trades, the entry points you've taken, what you could have done better. Just revise your risk-reward ratio and make adjustments accordingly. Now you might have heard of such thing as martingaling. This is in some cases used by more professional traders. However, for intermediate and beginner traders, it's really best and suggested to avoid martingaling because it is dangerous. It's essentially topping up on your exposure with another trade in the same direction along with the same move. So you're essentially initiating multiple trades on the same currency pair towards the same direction, and even with a higher lot size, in example. And this is dangerous because at certain times the market can simply continue in the direction you initially traded against, and this can really simply empty your account if you're not careful. So as I said, it's really just best to avoid martingaling in total. If you become familiar with scalping, the market conditions, you are aware how fundamental news of economy can affect the market conditions and the price movements, then you can start looking into martingale. Although even then, the martingale is really really risky practice. A dollar cost averaging is another type of it's not a martingale, it's directly, but it's a similar thing. While you are simply evening out your normal trade exposure between different trades with different entry points. At the end of the day, you are still risking the same amount that you would initially invest on one single trade, but you're simply spreading out the risk, you're spreading out the exposure between better and better entry points. Something to mention about the expert advisors, or EAs in short, that you can find on the internet. There are different marketplaces where people simply share their expert advisors for free or for a certain price. Now, with scalping, as it sounds really easy because you're making a lot of these small trades, you're getting out of the trades quickly, you're reaping those small profits. It sounds good, and a lot of expert advisors are designed just for that reason, to get into the trade and get out of the trade quickly, and reap you some quick profits. This is how they are advertised as well. Unfortunately, 99% of these EAs they tend to fail at a certain point. So they don't work longer term. So my recommendation is to either completely avoid any EA that you find on the internet that is either shared for free or you can purchase for money, or do really, really sufficient research from good sources before you continue to test out or try out the EA that you've been provided. These are the robots that trade in behalf of you in MetaTrader 4, just to explain. Now, another danger is news. While during the trending market, if you're trying to scalp, news are something you need for the price to be driven by. Meaning news need to drive the price inside the trending market if you want to scalp or enter at the retracements. However, some news can be so significant that they cause the price to move really unexpectedly. So it's quite often better to stay away from the news, wait for an hour or two when the price has settled, when the market has become stable again, and then start to thinking about whether to participate in the market or not. This can really hurt your ROI at the very end of the month if you are trading the news, or if you're scalping during news. And back to spreads, as mentioned before, keep to the pairs that have the lowest spread. This is important because you are trading high volume, and spreads can really eat away your return if you attempt to trade exotic pairs that have large spreads. Generally, the scalping is a very technical style of trading. You're not really looking at a really, really large picture of the market, because you are trading short term, you're trying to reap those small profits while keeping the stop losses tight. So this is really down to the technical aspects of the market, along with indicator analysis and also the candlestick pattern analysis to some degree. So technicals and technical side of the market is something you have to keep an eye on and focus on when you are scalping. Another thing I want to mention as well, you do have to have a certain degree of fundamental awareness, including news, which mentioned before. So better to stay away from news, but if you want to trade or scalp during the trend that is news driven, then you should be somewhat aware or side of the market the news affected, what currency, and so on. Okay, essentially that is it. If anything remains unclear, if you have any questions, then you can either write your questions in the questions section or inside the chat section itself, and I'll do my best to answer these. So go ahead. Okay, we have a question. Should we trade on trend line in scalping? Yes, you can use the trend lines to time your entry during the trending market. Trend lines are perfectly valid point of entry, especially if they lie on certain key support and resistance levels. Let's say a price is retracing from above to below slightly at the trend line and also hits a good support level. It's a really good time to enter the long trade and trade along with the trend, just to reap some pips there. Elvis is asking, how can I access this video? This video is recorded and will be uploaded to Hot Forex webinar section at a later time. So you can access it under your account on the website. Yok is asking, do you standard parameters of indicators or tweak it? Now this depends of your trading style. If you can use standard parameters, these are totally fine. You don't have to necessarily tweak them. However, while tweaking and making some tests, you can really reconfigure any indicator to meet your personal needs and your trading style. So there's nothing wrong with tweaking the parameters. Taradai Keys is asking, will you use 1 minute chart? I personally do not use a 1 minute chart to time my entries, because I find it too of a little time frame. It does not really give me a good picture of the market. The minimum where I go is 5 minute charts. This give just a little bit of better insight, and I do use these occasionally to time the accurate entries of my trades. Alfred is asking, I don't understand how the range is determined. I'm guessing you're talking about a ranging market type or condition. Sure, you will need to simply um, analyze the price movement. If you have a lot of if the price is consolidating within a certain range between a certain key support or resistance level throughout a certain time, you can see that the price is moving horizontally, essentially, between that range. So there you can see the range has been established and then the market is ranging. Said is asking which moving average is best. There is no such thing as best moving average. Each moving average has its own strengths and weaknesses. There are a lot of different variants out there: simple moving average, weighted moving average, exponential moving average. The formulas, how these moving averages are calculated, they do vary just a little bit. So if you're using the moving average crossover method to time your entries, then I would use an exponential moving average as the small period moving average, because that is a bit more sensitive to the current price movement and will allow me to enter the trade a bit earlier. But again, I need to reiterate and stress the importance of the potential or the possibility of false signals if you are using the exponential moving average inside the moving average crossover. Yok is asking, is divergence more accurate in higher time frames? Define higher time frames. Are we talking about monthly, weekly charts? Generally speaking, the higher time frame chart you're looking at, the more broad picture of the market you will get. And this should depend on your trading style and the duration, intended duration of your trades. If you're trading long term, you want your trades to last for weeks or months just to reap a lot of those pips potentially, then you need to look at the larger time frames. If you are scalping, then 1 hour, 4 hour, and 30-minute charts will do just fine. And same goes for any price patterns like or indicator patterns like divergences between two indicators. Fabricio is asking which technical indicator for entry works best for timing the entry on lower time frames. Now, there is no best indicator out there. They're all simply indicators. I consider indicators as tools to help me find potential trade setups and entry points. Although I finally, at the very end, still rely on the price action and what the price shows me just to time my entries. There is no such thing as the best indicator or what indicator works best. Taradai is asking how long will a scalping trade last? This can be from less than an hour up to end of the day, essentially. I don't usually leave my trades open for the next day. In some cases, I feel it necessary if I'm sure that the price will reach my take profit, but will take just a little bit more time. Then I can leave them open for the end of the next day. So it's really up to personal preference. What is your risk appetite? How long do you want to expose yourself to the ever-changing market conditions and potentially fundamental news as well? So yeah. Just to accompany the previous question from Taraday, how long will scalping trade last? That is using a 5-minute chart. The answer actually is the same. In overall, you should analyze multiple time frames to make trading decisions. So not only 5-minute chart, because then you would really be aiming for a couple of pip gains, maybe 10 maximum, but on the very long run, aiming for these small pippage gains, to my mind, don't suffice. So I wouldn't trade only from a 5-minute chart. Yak is asking, is RSI better to spot divergence versus the stochastics, or can the MACD be used too? And can we use pivots level to scalp? The pivots levels, of course, you can use. You can use these as the SR levels I explained about before. This can be considered as, the round numbers. Any other calculated pivot levels, these are completely fine. Regarding the two indicator divergence, you can match up a lot of two different indicators. You can use RSI stochastics, you can use RSI, RSX, you can use stochastic RSX, and so on, so on. So whichever works best for you, you should use that. Fabrizio is asking, any favorite MT4 add-on or indicator for auto-drawing support and resistance? I personally use and have always used a brilliant support and resistance levels indicator. If I recall correctly, you should be able to find it when you type into Google. I think it was ridiculously good support and resistance level indicator, something like that. And you should already have several pages or links to download it from. The name is a bit weird, consists of letters and numbers and hashtags, but that one will work well. It will show you support resistance levels on different time frames, etc. Taraday is asking, whether will you use ATR for stop loss? For manual trading, I don't use ATR as well. At all. Within a certain indicator or expert advisor that is automatically trading, an ATR is a good way to use for take profit, because the ATR is easily calculated and the EA can manage the take profit and stop loss levels based on the ATR quite easily. And automatic trading, yes. Manual trading, ATR, no. I don't like to use it. Bongan is using, how many pips are you targeting normally? That depends on the time of day. That also depends on my mood, because psychology plays a big role in trading. Yeah, depending on the time of day, depending on the session, it varies from 20 pips to 50 pips. Yok is asking, what if there is divergence in RSI but not in MACD? Do we need confluence? Well, not necessarily. You don't always need to have all the indicators matching up or giving you the desirable values. Because your final trading decision should be reliant on the actual price action, what is going on the market at the moment, how the price is moving, what are the nearby support and resistance levels. This is what your final decision should be made of. And he's asking also, HCR will be much affected on Newsday. Would it be a good guide on the Newsday to exit based on HCR? Again, I don't use it for manual trading. I do like to define my stop losses and take profits when I initiate the trade. I do occasionally manage the trade afterwards, meaning I'm in some cases moving my stop loss closer to the current price if the price has moved towards my direction. I have already earned a certain amount of pips. I, in some cases, move the stop loss to the very break even to prevent any loss from that trade because the price is fluctuating a lot. And sometimes I move take profit closer and further. I do it manually because I like to be in charge of my trading. So I don't really rely on any certain indicator to exit my trades or define those levels where I enter or exit my trades. I like to manage the risk-reward ratio myself and also based on the current market behavior. Yoki is asking, would you scalp on a corrective wave? No, this is a good question. If you identify a news-driven trend, then as mentioned before, occasionally the market and the price can significantly move a lot more than you initially predicted. So it's really difficult to aim for that very peak. So it's a lot more dangerous to trade at the peak and hope that the price will reverse and you're trading the corrective wave. It's a lot safer to wait for the corrective wave to happen. You use trend line or a support resistance level and then trade along with the trend after the corrective wave has finished. Okay, I think we should be wrapping this up today. I do appreciate all your questions. Thank you very much for attending today. This webinar is recorded. It will be uploaded on the website for you to review later on if need be. And yeah, thank you very much for your time and enjoy the rest of your day. Take care.